And we are ready to go.
Great. Good morning, everyone. Today is Thursday, August 11th, 2022, and I'm calling this meeting of the Tax Expenditure Review Commission to order. This meeting is being held remotely in accordance with guidance from the House Speaker and the Senate President. The meeting is being recorded via Zoom and live streamed on YouTube. All meeting documents and presentations are available on the Tax Expenditure Review Commission website. First off, Ms. Ho, will you please take the roll?
Thank you, members. Please unmute yourself for the roll. Chair Gomez.
Gomez, present.
Vice Chair Rest. Representative Davids.
David's present.
Representative Schultz.
Present.
Representative Hertas.
Hertas present.
Senator Dietzick is excused. Senator Weber. Senator Nelson. Senator Bach. I barely heard him. Representative Marquardt.
Marquardt present.
And Commissioner Doty.
Present.
Thank you. We have a quorum, Madam Chair.
You're muted, Chair.
Thank you. There being a quorum present, we're going to review and adopt the minutes from the July 14th meeting. Do we have a motion to move to adopt those minutes?
Hertas moves, so moved.
Thank you so much. All those in favor, please say aye.
Aye.
Aye. Any opposed, please say no. All right, the motion prevails and the minutes for July 14th are adopted. So first off, today we're going to welcome to the commission Mr. John Hammond. We're continuing today. Kind of the first part of our meeting is going to continue to ground us in sort of like to establish a common base and foundation in this work. And the second part of our time together today, we're going to really be digging into how we're going to operationalize the requirements that we put into statute and how we're going to move forward getting our that December 15th initial report to the legislature out, and kind of how we're going to move forward with the beginning parts of this analysis that we're going to send to the legislature. So first, we're welcoming Mr. John Hammond, who's a principal associate for the Pew Charitable Trust's State Fiscal Health Program. Mr. Hammond is going to give us an overview of tax expenditure evaluation practices in other states. We're really thankful for this context for us as we're kind of new to the work. We know that there are other states who have already put procedures into place, some of whom have completed an analysis. So we're really actually fortunate to be coming in at this point where we can learn from some of their practices. So thank you. Welcome to the committee. Welcome to the commission, excuse me, Mr. Hammond. Do you want us to take questions as we go along, or do you want us to wait till the end of your presentation? Do you have a preference?
No, I'm perfectly happy to answer questions as you guys have them, or wait to the end, whichever. So feel free to interrupt.
The way my mind works, I kind of like to take them as they come, because I feel like that makes a better conversation sometimes. So if with your permission, I think we'll do that. So if any member has a question, just put your hand up. I'll be keeping an eye on it, and we'll sort of interrupt you as we go along. Okay. Thank you so much. If you could just introduce yourself to the committee, and then we'll move on with your presentation.
Yeah, sounds good. Thanks very much. Yeah, like you said, I'm John Hammond. So let me get my slides up, and I can introduce myself and Pew and our work on the topic. 1 minute. Okay, can everyone see that? Let me make it full screen. All right, good. Okay, so yeah, thank you very much, Chair Gomez and members of the Tax Expenditure Review Commission. My name's John Hammond, and I'm a researcher on the tax incentives team for the Pew Charitable Trust's State Fiscal Health Project, like you said. So a little bit of background on Pew. We're a nonpartisan, nonprofit research and public policy organization dedicated to serving the public interest. And my team, we focus on state fiscal and economic policies. So we conduct research on technical assistance, and we help states like develop evidence-based approaches that are proven to work on issues ranging from building a strong fiscal foundation to protecting public safety and health. So the tax incentive team that I work on, we help states design process to regularly study their tax incentives. And then once these practices are in place, we also help the evaluations to make sure that they're high quality and that they draw clear, well-supported conclusions. And we also help policymakers understand and use these findings. So my presentation today, we'll start with some reasons that states benefit from evaluating tax incentives. And after that, I'll provide an overview of state evaluation processes across the country and highlight some best practices for evaluation. And then I'll wrap up with some strategies policymakers have used to ensure that these evaluations are used in the policymaking process, and give a few examples of how other states have done so. So why should states evaluate tax incentives? We think there are at least a few good reasons. Tax incentives are one of the primary tools that states use to create jobs, attract new businesses, and strengthen their economies. But they're also major budget commitments, collectively costing states billions of dollars a year. And lawmakers have often lacked good information about how well these programs are working. But that's starting to change. So lawmakers are increasingly demanding good information on the results of these programs so that they can invest in them, the ones that get the best results. And our research shows that when states actually gather this evidence, that they use it. For the past several years, our team has been working with states to design and implement processes to regularly evaluate these incentives so that they can identify the programs that are working well and invest in them with confidence. Evaluations can help identify subtle changes in program design to increase effectiveness or to inform lawmakers about programs that are ineffective or obsolete. And evaluations are also an opportunity to analyze whether incentives are serving the needs of their intended beneficiaries. Finally, evaluations provide policymakers with a baseline information so that they can have more constructive conversations about their incentives. So when we first started doing this work about 10 years ago, there were actually only 6 states doing regular evaluation of their tax incentives. And that's changed a lot. So today there are more than 30 states and the District of Columbia, New York City, and Philadelphia that regularly evaluate their tax incentives. So there's really been an appetite for better information about these programs. States approach tax incentive evaluation in a lot of different ways. And one of the ways that they customize their evaluation process is in who they designate as the evaluator. So here's a map of all the different offices that states have chosen. So one way, so some states have used executive branch agencies to do the evaluations, like in Iowa, the Department of Revenue does it. Others have used independent agencies. In Philadelphia, they've chosen the Independent Budget Office. A lot of states use legislative staff to conduct the evaluation. So Maryland, their Department of Legislative Service does it. In some instances, as in North Dakota, legislators themselves are responsible for the evaluations. And finally, some states contract with external experts such as universities or consultants to perform these evaluations. And this, yeah, go ahead. Oh, sorry. So and this map just shows the state's designated evaluator. So many of these offices reach out to other groups for additional assistance. So for example, in Virginia, their Joint Legislative Audit and Review Commission has partnered with the University of Virginia to improve their data collection and help with their economic analysis. And the scope of evaluation also differs across all of these states. So here's a map of this. So in Minnesota, your process covers all tax expenditures. Other states like Nebraska have opted to focus on economic development tax incentives, which has traditionally been what our project has focused on. And still others have included all economic development incentives. So that includes the tax credits, but also other forms of assistance like cash grants or loans. So that's how they do it in Oklahoma. The number of programs states decide to review often relates to how long they allocate to complete each evaluation cycle too. So these generally range from 3 to 6 years, but they go from annually to 10 years. But most states are in the 3 to 6 range. And one common question we get is on how states staff their evaluation processes. And there's really a wide variation between the states. It's kind of difficult to provide an answer that holds true for everyone. As you saw, like who states choose to conduct the evaluation really varies, and that can make a big difference. So some states choose agencies that already have ample research capacity, and some states supplement their analysis with outside experts. So like in North Dakota, lawmakers have asked the Bank of North Dakota to provide analysis on the economic impact of the state's incentives. The scope of review matters too. So many offices add staff so that they can continue to perform their office's existing responsibilities. So like in Colorado, the Office of the State Auditor asked for additional staff when they were asked to begin reviewing 162 tax expenditures in 2018. How often states look at the same program makes a big difference. So states with shorter review cycle schedules, some have like between 1 and 3, they generally need more folks to do the same quality of work. One observation that's true across all these states is that starting evaluation process really is a lot of work, especially if it's a state that's evaluating all of the tax expenditures or incentives. States that have built up robust processes find that it takes less time after the first round, especially if there haven't been major changes to a lot of their programs. So for example, in Washington, their state's Joint Legislative Audit and Review Committee has shifted its focus since it's completed its first round. And they've started focusing on more detailed analyses on the really big programs or the otherwise significant programs. So one of the things that they do is they propose full reviews for programs that they know need to be revisited. And then they propose alternate full reviews if the staff have time and capacity. And then after that, they propose like expedited or cursory review for the programs that are underutilized or haven't changed. One important part of the process in Washington is that there's a good dialogue between the commission and the evaluators. So the commission that receives the evaluations. So as in many states, JLARC actually begins each review year with a conversation to discuss capacity and kind of set expectations about what they're going to be able to cover that year. So they're generally kind of flexible about that. So the dialogue is really important. So one year they asked for an additional year to have kind of 2 full years to cover the state's aerospace incentives, because they knew that those were really significant programs and the extra time would really benefit the evaluations. So in a lot of states, these processes are subject to change to meet the needs of the legislators and policymakers. So in Maine, for example, the Oversight Committee lengthened the review schedule for evaluators to allow them to complete a more thorough review. And they've produced some really strong analyses because of the extra time without having to hire additional staff.
Great. Mr. Hammond,
Yes.
Vice Chair Rest, Senator Rest has joined us. Thank you so much, and had a question for you, actually.
Please go ahead.
Yeah, thank you very much. I believe that you mischaracterize in one of your former slides who does evaluations in the state of Minnesota. It is the Office of the Legislative Auditor, the OLA, which is similar, although not exactly the same, as JLARC in Virginia. To say that it's directed, that reviews are directed by legislators is not taking into account the vast authority that the Office of the Legislative Office does. Certainly their work in terms of program evaluations, which is what you're actually talking about here, when it can be a tax thing or it can be how effective is the Department of Human Services in saving taxpayers money or whatever. That work is directed by legislators in the sense that we vote on the program evaluations, but the study and the office is totally independent, and the findings are independent and are not subject to legislator review. Also, the OLA can undertake special reviews under its own authority, independent of anything that the Legislative Audit Commission does. So I think maybe there's a different color, if you will, that you should, I don't know which colors you would combine, but to say it's legislators itself is just not accurate and it's not correct. And you should review how you characterize the work that is done by the OLA that is so much more similar to JLARC than I think you're representing it. Thank you very much.
Yeah. Sorry, Chair Gomez, did you have something to say?
Nope, just
Okay.
thank you, Senator Russ, go ahead.
Yeah, thank you so much. And Senator Russ, I am very happy for the opportunity. I definitely take all of that. I am thrilled at the opportunity to laud the legislative auditor's efforts. I think that what they've produced are some of the strongest in all of the states, and I will be the first to commend all of the work that they've done. And so the colors of the map definitely, is subject to interpretation. I think for the purposes of this, we were talking about kind of this commission's role in evaluation. And I think in like kind of previous versions of this testimony, I think it has been a different color kind of review or referring to the legislative auditor's work. So we think it's tremendous that you guys have them to work with on these efforts. So yeah, I think that's absolutely true. And you guys are very lucky to have the legislative auditor's previous work and existing ongoing work. So it was my understanding that kind of they took the requirement that the legislative auditor do these on a regular sort of basis, but certainly still can and will continue to perform really tremendous work. So I'm glad that you brought them up. I hope that they'll be a really strong partner in the legislature and policymakers generally, your work on evaluating tax incentives. So thank you for the point.
Yeah, I don't see any other questions. So if you want to just hop back into your presentation, that would be great. Thank you.
Sure. Yeah, I think that was the last point on this slide. So I'll just keep moving on. So next up is best practices on conducting an evaluation. So when doing an evaluation, I think there are several criteria and questions that we encourage analysts to consider. So I think at a minimum, we recommend high quality evaluations include a description of the incentive, its history, its goals, also an assessment of the incentive's design and the way that it's administered, and an assessment of the incentive's economic and fiscal impacts, along with policy recommendations. So I think, you guys have already heard a lot of presentations about what's included in Minnesota's laws. So I think all of these are already in there. You guys have really strong setup there. So I think there's even more. So you guys have gone the extra mile in a lot of ways. Some other kind of criteria that you can consider or evaluators can consider when they're looking at incentives. One of the trickiest questions that evaluators are going to face is measuring the impact of incentives. And there's kind of a lot of different approaches an evaluator can ask questions about how an incentive is performing. So here are a few of them. So displacement is kind of to what extent the credit benefits some taxpayers at the expense of others. There's leakage, so whether the credit has out-of-state beneficiaries or if an incentive has been targeted at a specific region in the state, whether there are beneficiaries outside of that targeted area. There are timing effects. Timing is a really important element of incentive design that affects both how big an incentive impact is on the state's budget and how it affects the economy more broadly. You have opportunity costs. So the dollars that a state uses on a tax expenditure are not available for other purposes. So evaluations have often compared the results of certain expenditures to the expected impacts of alternate uses of the funds. For example, they've looked at across the board tax cuts or increases in general revenue spending with kind of the similar level of expenditure. And finally, an important one is but for. So this is whether the credit changes taxpayer decisions, including whether the credit rewards decisions that would have been made regardless of the existence of the tax credit. And we find that this is a really important factor and one that states have spent a lot of time kind of exploring how to find practical answers for it. So I'll go into a little bit more in depth onto this and happy to provide more detail. But so just understanding how the tax incentive changes behavior is really crucial to measuring its economic impact. So the tax incentives only benefit the state to the extent that they encourage new behavior as opposed to something that the business would have otherwise done. So if you don't consider but for in the analysis, an incentive program could claim to have caused all the new activity that's created by the recipients. We like to think of the incentive as just one of the reasons why businesses locate in a specific place or expand in a specific place. So the influence of the incentive program is really somewhere between 0 and 100% for the entire portfolio. So when evaluating incentives, it's hard to know exactly how much that they influence business behavior, but states have been really clever in developing different analytic techniques to make reasonable estimates. And I'd be more than happy to provide some more examples of how states have tackled this really tricky question. So moving on, if
Sorry,
there aren't
can
any
I
more
just-
questions. Oh, sorry.
Oh, yeah, I had one. I'm wondering, 2 slides ago, when you talked about displacement, about who benefits and who kind of at the expense of whom. Like we have in our, one of the requirements of our analysis is, if it's a significant tax expenditure, that we estimate the incidence and the effect on the overall incidence of our state's tax system. So it feels like that, like kind of gets at that, but maybe not all the way. And so that was my first question, is if you have thoughts, especially as you looked through our statute, I imagine, like comparing it to these important criteria. I'm interested especially in, the other kind of side of the displacement question. And then also I'm just noticing, like, we don't have the but for test in our statute, which is maybe why you kind of picked it out to talk about. But if you have any other kind of comments just about, what we have in statute versus what you see as these sort of best practices criteria. Any thoughts would be.
Yeah, I think it's a really good question. Generally, I'm of the mind that the statutory criteria can provide like a really helpful guide, but ultimately it's like the dialogue that you're going to have with your evaluators that's kind of going to guide like what both they're going to be able to provide and what's based on what data is available and on what you want to see. So I think that there's a lot in your statutory criteria that have to be considered already, and I'm certain that the evaluators are going to provide some level of detail on all of that. But I think at the end of the day, like it's something that as lawmakers, you can ask them to build on or focus on a specific thing more than others. So like, and it's going to change from incentive to incentive oftentimes. So sometimes the displacement question is going to be really, really relevant, especially if it's like a geographically targeted program. And in other cases, I think there's going to be incentives where it doesn't really make as much sense to spend a lot of time on. So I think I'm less prescriptive about having like really solid guidelines in statute and like forcing the hand, where generally I think evaluations are more successful when they spend the time on where the incentive really needs a little bit more scrutiny. So I hope that's helpful.
It is. Thank you very much. And Commissioner Doty, our Commissioner of Revenue, had a question also.
Thank you, Chair Gomez. Mr. Hannon, just I'd love to, if you could give us a couple examples on going back to the but for and those analytical tools, because I'm sitting here trying to think of how how you go about that. And I'd just love to understand how some of those analytical tools are used, if that's okay.
Absolutely. Yeah, I'd love the opportunity to talk about them. So I prepared a bunch of examples, but I didn't want to go through all of them just in case I ran out of time. But so I think ultimately there are really sophisticated ways to try to answer it using economic models and a ton of data. If you kind of have that sort of thing, and if you have the staff capacity, if you have the expertise. But I think that there's also like some really simple kind of not quite back of the envelope, but more straightforward questions that evaluators can ask about their incentives when trying to get at this question. So one of the, we've prepared a couple of memos on this, so I'll definitely send them along afterwards with like examples of actual evaluations that have asked these questions. But so like a really simple one is in Massachusetts, the Department of Revenue reviews the state's film incentive. And one of the things that they do is they kind of cull projects that they think very clearly would have been filmed in the state without the incentive. So like stuff that's local programming, that's educational, that's like public affairs, or stuff that's covering like a sports team that's in the state. It seems like it doesn't really make sense that you're locating a film company from somewhere else to come to Maryland to produce that sort of content. So just really kind of quickly, you can kind of back out the programs that you think very clearly would have been located there, even if the incentive wasn't there, right? So it can be really simple stuff like that. And then you kind of realize that you're kind of chipping away at this idea that 100% of the business behavior is attributed there because of the incentive. So another really kind of straightforward one is business surveys. So a lot of states have had a lot of success, including one of the examples we really like to talk about is Minnesota, your angel investor tax credit. An evaluation of that, I think it was the Department of Revenue. This was a while back. But they included a survey of businesses that were participating in the program and kind of asked kind of what their stakes were, whether they were likely or whether they were investing in firms that they were kind of connected to. So and I think a lot of surveys that I've seen, businesses have been really straightforward and clear with why it is that they've located in the state. And it's not usually that incentives is like their number one reason. So like there's really some straightforward ones. And then there's like, you can get even more complicated. There's like gap analysis sorts of things where you kind of look at a capital stack for if it's like a capital incentive and you say, well, they got the money from the bank here, they got the money from the city here, they got the money from philanthropy here, and like they need this kind of extra hump to get over to where they actually can make the program profitable. So that's, I think, really common in the capital world. And if you can kind of ask an evaluator, or if an evaluator can kind of ask to provide those documents, it makes it really clear that actually there is this missing thing. And I think that's really common in like kind of low-income housing programs where they'll say, the market really isn't there. We need something else. Otherwise, there's no way we as a developer can build this and get profitability. So it's kind of simple stuff like that. And then there's also plenty of more complicated stuff like sensitivity analysis, break-even analysis, and lots of other states. So those are a few examples. And like I said, I'm more than happy to provide plenty more examples.
Thank you.
Thank you very much. You good, Commissioner?
I'm good. Thank you, Chair McCombs.
Yeah, just on that topic, we have, and going back to what Vice Chair Rest said, one of the things, actually, I mean, it sticks with me because it was in my first week in taxes, I think we talked about it, about the legislative auditor's analysis of our research and development credit. And there's, kind of what's in that report. To me, it sort of is one of the things that compelled me to be interested in tax expenditure analysis in general. And I think the commissioner really highlighted the critical question about that particular one, right? Which is one of our biggest kind of business tax sort of incentives is about the but-for is the real question. And that we need to grapple with and answer. So I guess I just wanted to mention that because it made me think of this. So thank you, Commissioner, for that question. And Mr. Hammond, if you have, we can go back to your presentation, or I don't see any other questions.
Sure. Yeah. And thank you so much for the conversation. I appreciate going into the details. I'm glad you guys are really interested in digging in. So yeah, I think that's kind of all I had to say about but for. Like I said, it's a really tricky and hard answer, but I think that we really encourage states to try, right? Like I think that it's a missed opportunity to not at least ask the question, even though it's a really tough to find clear answers for it. So moving on, strategies for policymakers. We find that a great evaluation really is only useful if it makes its way into the policymaking process for a state. So one of the key components of a high quality incentive evaluation process is a system to inform those policy choices. And states have done this a few different ways. So one of the most common approaches is to designate a committee to hold hearings on the evaluations. Those are often standing interim committees. This ensures that lawmakers kind of have an opportunity to discuss the results of these evaluations every time that they're released. So as is the case in Minnesota and in North Dakota, legislators are the evaluators. So at least partially the evaluators, right? So you guys have a responsibility and a role there. But in North Dakota, a legislative interim committee meets many times over the course of the interim to discuss the tax incentives that are up for review that biennium. And once they've heard that information from staff and parties wishing to present testimony, they compile the recommendations and then send those directly to the full legislature. Rhode Island uses a little bit of a different mechanism. So by law, the governor has to include recommendations on whether to continue, change, or amend. Continue, amend, or end each incentive that's evaluated the prior year in their budget proposal. So these gubernatorial recommendations are then subject of legislative budget hearings, which provides lawmakers an opportunity to consider the incentives alongside other state spending. In Oklahoma, their process is overseen by a commission, and that commission includes like non-voting executive branch officials from the Department of Commerce, and they're also from their tax department. So that ensures that state leaders are involved in the review process. And then other states use existing standing committees or create new committees to provide a place for their evaluators to share their findings and give an opportunity for lawmakers to hear testimony from the public. So there are a few ways that findings and recommendations from evaluations can make their way to policymakers, but how do those that are responsible with producing these reports generate these recommendations? So in many situations, evaluation offices are reluctant to make decisive recommendations to the policymakers to act on. And that's especially true where states where legislative staff are responsible for creating these reports. They often see it as your job, as the job of elected officials to decide on what actions to take. But we find that evaluators are often the ones that spend the most time digging into the details of these programs. And they're often in the best position to kind of tease out the impact compared with potential alternatives. So we've seen in states, staff finding creative ways to present these options to policymakers without being overly prescriptive. So one example is in Louisiana, the legislative auditor has done this by highlighting matters for legislative consideration. So rather than make direct recommendations on policy, they just note significant design characteristics that lawmakers may wish to consider. So, for example, a recent review of a jobs tax credit there, they pointed out that the program had kind of flat wage requirements across the state, even though wages across the state vary widely by region. So policymakers may wish to consider accounting for those variations. So in addition to that, the legislative auditor in Louisiana provides recommendations that are directly related to a program's administration towards the administrating agency. So these recommendations, there's one in the jobs tax credit report that I mentioned that the agency should report on actual jobs that are created, in addition to the ones that the number of jobs that a business anticipates that it will create when it applies for the incentive. Another model is in decision points. So Pennsylvania uses this model. So In Pennsylvania's incentive law, they ask the Independent Fiscal Office to create a tax credit plan that guides policymakers. And the IFO actually has a lot of flexibility to determine what's in this plan. One of the models that they've used is breaking it into 3 parts. So one of those sections is identifying these key decision points for policymakers to consider that they could use to improve the incentive program. So one example is there was a recent evaluation of Pennsylvania's brewer tax credit. They asked policymakers to just really consider what the goals of the program were. So, for example, did they intend to help all brewers, or is it only small brewers? Is it intended to be an ongoing subsidy, or is it intended to only be available for brewers that are just starting out? So having those questions before them really helps policymakers think about the recommendations that IFO ultimately presents. And finally, tax credit review worksheets. So as part of Montana's evaluation process, legislative support staff have prepared these worksheets to help guide the committee hearings on the incentives that are subject to review. So this helps lawmakers address the statutorily required analysis topics. These worksheets give lawmakers space to kind of note their observations on how well an incentive scores across the review criteria, and then think about what kind of actions should be taken at the end of the review period. So like they help them think about questions like, does the community need more information before it acts? If so, what? Should they repeal the credit? If not, should they amend it, and how, or leave it unchanged? And I think that they found that it's been a really helpful tool for policymakers to kind of keep notes and keep track of what conversations they've had on an incentive as they go through. So as you think about kind of the ways you want to approach your own evaluation process, we've provided a few additional questions you may wish to consider because you clearly don't have enough work that you already have before you. So this is a lot. I'm just going to highlight a few of them that I think are really critical. So is a program designed to achieve its intended goals? Is it duplicative of another program in the States? Like, these are really interesting and important questions to have before you. So another one is the program's purpose still relevant, and is its cost still justified? And kind of one of the final ones is it administered efficiently? So oftentimes those are some of the findings that evaluations have found, and these are really important questions that a lot of evaluations have started asking. So naturally, some of these questions are going to be informed by reviews that your staff provide based on the evaluation statute that we've talked about. But like I said, a lot of policymakers have kind of gone beyond what's in their law, including asking for follow-up analysis for programs that they really wanted more information on. So as an example, in Florida, after they got the review of their first enterprise zone program, they kind of asked the evaluators to perform additional standalone reviews just for that program. And that additional detail they used to ultimately kind of sunset the program based on the findings in that additional detail. So the flexibility is yours. I think it is really important to kind of think about making a process that kind of fits your needs, and you should kind of continuously be thinking about that. Okay, so getting ready to wrap up. So policy change. So I'll turn to a few examples of how states have enacted policy change. So this is just a really small handful. I think we've gathered dozens of different changes from dozens of different states to improve, repeal, or replace underperforming programs. So, and we're always happy to share more, especially if there's like a certain program that you're interested in. So first up, DC. So in 2 consecutive budgets in 2019 and 2020, the Council of the District of Columbia voted to cut the district's largest package of economic development incentives that were known as the Qualified High Technology Companies Program, or QHTC. And collectively, these changes were estimated to annually generate over $35 million in additional revenue for the district. They explained why they did this in their budget and financial plan, and they highlighted findings from an evaluation of the program that the Office of the Chief Financial Officer did in 2018. And that evaluation noted really significant design concerns with the program, including finding that there were several large companies that were awarded really sizable QHCC credits without the evidence that there was commensurate benefit to the district. Moving on, and policymakers use this evidence to do more than just simply eliminate poorly performing programs. So this one's in Maine. In 2017, Maine created a new program to encourage business headquarters to locate in the state. But they actually delayed the implementation of the incentive until 2020 to give the state's Office of Program Evaluation and Government Accountability, OPEGA, time to evaluate the program's design. And the resulting study actually provided lawmakers with information that they used to amend the program before it went into effect. So two of the things that they did, they strengthened reporting requirements for the participating businesses and clarified process for recapturing credits if necessary. Moving on, in Maryland, so their evaluator, the Department of Legislative Services, they reported that certain design and administrative features on the job creation tax credit were limiting its effectiveness. So, and in response, the General Assembly in 2017 implemented 5 of the recommendations from their report. So these included increasing the value of the credit, allowing businesses to claim the full value of the credit in one tax year, lowering the job creation threshold in certain counties, changing the requirements for qualifying jobs based on the state's minimum wage, and then modifying verification and reporting requirements. So, and finally, North Dakota, lawmakers have modified an existing credit and created a new program as a result of their evaluations. So first is the angel investment tax credit. So when reviewing that program, legislators found that about half of the companies that were claiming the credit were actually located outside of the state. And as a result of that, they passed legislation to reduce the leakage of those benefits by better targeting it to the businesses in North Dakota. And more recently, lawmakers there use their evaluation process to expand the state's economic development toolbox by creating a new incentive aimed at helping businesses modernize their manufacturing processes. And they created this credit that followed several kind of design best practices that we found. So fiscal protections, accountability measures, and these include that the business activity has to be new. The businesses have to provide data to facilitate the evaluation of the credit's effectiveness. There's an annual cap, and then there's a clawback mechanism if the claimants kind of fail to meet these increased productivity or job creation thresholds. So getting ready to conclude, Minnesota, you are among an increasing number of states that have started evaluating your tax incentives to provide policymakers with more detailed information on your really important programs. And as a few of these examples have shown, evaluations are leading to policy changes. They're helping programs meet their goals or direct resources to other priority areas. And your law reflects best practices for incentive evaluation by you have a regular plan to rigorously evaluate your expenditures and a strong connection to policymaking with this committee overseeing the evaluation process. So that's all I have prepared. I'm happy to answer any questions.
Great, thank you so much, Mr. Hammond. That gave us a lot to think about, I think, you know, especially about how it is that we, you know, kind of connect the work that this commission is going to do to making changes and decisions about modifications to statute, and then also kind of like, I guess what I'm thinking about is, you know, being able to expand a little bit beyond what is written in black and white in our statute as we, you know, kind of move through this process and see places where there might be other considerations that we want to bring in. So just really thankful for that perspective. I don't know if anybody has any final questions for Mr. Hammond before we let him go. I'm not seeing any hands up. But I know I'm going to be going back to this presentation as we move through this process. And so we're really grateful to you, Mr. Hammond, for joining us. Thank you very much.
Thank you. And like I said, we're always available as a resource. So if you ever have any follow-up questions as things come up, please feel free to reach out to us.
Perfect. We're gonna take you up on that. Thank you. All right. So we might be a little tight on time, but we're gonna try to get through the second part of our meeting together today. We're gonna turn our attention really to the work of this commission, specifically what we have to do to identify purpose statements, which is one of the things that is in statute that we kind of need to do as a foundational piece of work. We've been hearing from, we've heard from our Department of Revenue, from some outside experts, both local and national. And I guess I just want to, as we welcome a member of our LBO staff, I just really want to express my gratitude to them, to Christian Larson, Christy Schrodel, Carlos Huereca, and Catherine Ho for all of their work on this. We're really lucky to have a really wonderful team to help support us through this process. Mr. Huereca, who's the LBO's lead analyst for our commission, is going to talk a little bit about the process that they're proposing that we follow to establish purpose statements. Mr. Huereca, I'm going to hand it over to you. Are you good with us interrupting you with questions, or do you want us to wait till the end?
Yeah, thank you, Madam Chair. I'm happy to take questions as it come up.
Perfect. All right, let's get going then.
Okay,
Thank you so much for being here.
absolutely. I'm going to share my screen here with folks. Okay. So Madam Chair, as you mentioned, my name is Carlos Huereca. I'm a lead analyst with the Legislative Budget Office. And as members are aware, the Legislative Budget Office is tasked with providing professional and technical support to the Commission. And so in that capacity, we're developing processes to support the work of the Commission. And so today I'll just discuss some context behind purpose statements and identifying purpose statements to support the work before you. So I'll be discussing some of the statutory requirements that the Commission should be aware of. I'll provide an overview of the process that we'll take, analyzing the tax expenditure as our starting point, the tax expenditure budget, which Mr. Willett discussed at the last meeting. So I'll discuss the process that we're developing, and then just very briefly go over some previous efforts that have been taken at the legislature to identify purpose statements previously. So current statute does require that a statement of intent be included in bills that create, renew, or continue tax expenditures, and that has been in law since 2010. To fulfill this requirement, legislative staff has done some work around this to draft and define purpose statements. And so it should be noted that these purpose statements do not always get adopted into law. They may be codified or live in statute in session law, but not always do they become enacted. And so just as pertinent to the work of the Commission is the enacting statute and subdivision 4, which requires that the Commission provide an initial review of the existing tax expenditure provisions within the first 3 years of being established. And through that review, the Commission is to identify purpose statements for those provisions which do not have a purpose statement enacted in legislation. And so in our capacity and preparing for this initial review, we've developed this process, which I'll go over. And we expect this initial 3-year review. At this point, we expect that to expire in the second half of calendar year 2024. Again, that's just to identify purpose statements. So as I've mentioned, our starting point will be those provisions identified in the 2022 tax expenditure budget prepared by the Department of Revenue. So just to reiterate a very small piece from Mr. Willett's presentation last time at the last Commission meeting, there are certain criteria that limit what is included, those provisions which are included in the tax expenditure report. These are here on the slide. As Mr. Willett did provide an overview of this, I won't go too into the detail of the criteria. Additionally, all members have a copy of the tax expenditure budget, and there's additional detail within the report itself. So I really just bring this up to make the point that these criteria define the starting point of the process that we've laid out. And again, that's just the starting point. So I'll go into that now. So within the tax expenditure budget, there are 316 provisions. Our office does expect to provide some level of review to all 316 provisions. A handful of these already have a purpose statement written into statute or session law, as I mentioned. And for those that are already enacted, we can plan to collect them and identify them, just again to provide them to the commission so that members are aware of them. And the work that has been done previously that I've alluded to already, we'll take that into consideration as well in all of these that are already enacted or were previously documented in history of the legislature. Of those provisions that are included in the tax expenditure budget, 82 we've considered as federal conformity provisions. These are conforming to federal exclusions or deductions within the U.S. tax code. Previous purpose statements for these types of provisions have been made and made direct references to federal conformity and simplification of compliance. And so in addition to that, we can prepare to provide a deeper analysis as to the purpose of these expenditure types at the federal level for context for the commission. And as I've mentioned, many of these provisions do not have a purpose statement enacted into current law, but that's not to say that there would not be a purpose statement that we could identify within the documented log and legislative history pertaining to certain provisions. And so that will lead me kind of into the process that we've been devising. And so for those provisions that lack a purpose statement, we will prioritize conducting legislative history research specific to those laws. And so what that means is that we'll review previous engrossments of enacted bills. We'll review pertaining documents such as meeting minutes, video and audio archives. When feasible, possible, and available, we'll do our best to conduct author interviews. There's obviously limitations to that. We'll reference legislative reports such as, for example, the Minnesota Historic Rehabilitation Credit Tax Credit Report, which is an annual report mandated. At this point, it's produced by the University of Minnesota Extension, and that's in concert with the Department of Administration. Additionally, we're prepared to review previous versions of similar bill language. As members are aware, legislation is often introduced in multiple biennium. And so the idea behind this is that the legislative record would be the most accurate reference in terms of intended purpose, of intent by authors. Additionally, we're prepared to research comparable legislation and reports in peer states. As Mr. Hammond very well demonstrated, many states are already conducting this work. And so we're very fortunate to be able to leverage the work of other states and other offices and our professional colleagues to understand purpose statements and how other policy design has been evaluated. Third, we'll reference academic and industry consensus. And so that may involve taking a deep dive into academic journals, text, and publications by professional associations. And so we're preparing to conduct this work and support at the direction of the commission. So this is a process that we've devised. Certainly very open to feedback from the commission members. But we've been devising this process and referencing other legislative offices that might conduct similar work. So we've been working with the Legislative Reference Library, research departments within the legislature as well. So very briefly, I've been mentioning past efforts to identify purpose statements already. The House Research Department has done a lot of this work. They shared some of that work with us, and what they identified is that in the special session of 2011, the first special session of 2011, 8 purpose statements were enacted into session law. In 2013, similarly, 12 provisions were enacted into session law. And most recently, during the 2021 regular session, quite a few provisions were included in the omnibus tax bill. 15 of those were specific to legislation that was introduced within that biennium. And 27 provisions were introduced to provide a purpose statement for provisions which had been enacted in previous sessions. Okay, and so for the commission, for reference, I provided just 2 examples of purpose statements which are documented in current law and codified. This type of language structure is something that we'll attempt to identify through this initial review process that we've kind of gone over here. We'll try to replicate the structure. It's very clear. It identifies, for the most part, who the intended beneficiary is, and we'll try to implement as much as we can plain language, direct language, so that it's clear what the purpose is based on the research that conducted. And so, Madam Chair, members, that's just a very brief overview of the process that we've devised. There's obviously a lot of nuance within that process, but just keeping it high level for the commission at this point. Like I said, we're very open to feedback, but we'll prioritize legislative history research pertaining to Minnesota as much as possible. So just very briefly, an overview, and I'm happy to answer any questions here or offline as well.
Excellent. Thank you so much, Mr. Whitaker, for that information. If anybody has questions, please raise your hands. So our kind of like decision point here is about how we're going the process for dealing with these purpose statements. Mr. Whitaker just went over the sort of what the LBO staff is proposing. If I don't hear any feedback from committee members, either now during this meeting or by email in the next couple of days, I'll assume that we're going to move forward with that. I think it looks rigorous and good, and appreciate that work. And what I would propose, and again, open to feedback. If we don't hear anything, we'll sort of assume it's good. But a couple of considerations. One is that I think that we should have our staff bring in purpose statements to this commission as they're developing them, and that we all kind of as a group we take a look at them. If there are, I don't think we need an official vote on the purpose statements, although I'm open to other feedback about that. But I was thinking about it when I used to serve as a staffer at a city council. Like, we'd have a consent agenda and then like a discussion agenda, and you could kind of pull things off the consent agenda for discussion. And so I sort of think I'm thinking about it like that, kind of like they're going to come with these purpose statements. We'll read through them ahead of the meeting and then come in. And if there are any that we want to dig deeper on, that we think there's an issue with, then we should pull those off and have that discussion, and then make a decision from that point as a group, whether we're going to kind of send it back for more work to the staff, or we feel good moving forward with it. So that's like the first piece. I see Senator Vice Chair Rest. Did you have thoughts or comments on either of those pieces?
Thank you, Representative Gomez. Yeah, I would hope that we don't take any of these proposals as part of a consent calendar. As you know, over the years, the Senate has been opposed to purpose statements, and that's why there's so few of them, because even though they make their way into the omnibus bill from the House side, they have not been adopted in the final conference committee report. So I think the scrutiny is extremely important. I noted the the purpose statement that was put on the screen about property tax with regard to veterans and veterans with disabilities is a moral statement. It's a social statement. It's social policy. It's social justice policy. And it really has very little to do with examining that particular law with regard to what makes good tax policy. Now, there might be a purpose statement that addresses the pillars of good tax policy, but I think we have to be very careful about not making social policy statements and moral statements, even though we may say that tax policy indeed reflects the morality of a state, and as we certainly do in Internal Revenue Code as well. We're here to examine things and to do so with very close scrutiny before we go any farther. So I hope that we're not going to take much of anything on a for granted basis on the recommendations just of staff, and I respect the work that they do, as well as the enormous respect for the work that the Department of Revenue does with regard to the revenue estimates for any kind of new policy. So I just hope the LBO official, in my mind, ignored the Department of Revenue, which is where we get our information about what a new proposal is going to do. Now, the LBO never, doesn't have to pay any attention anymore to, or the legislature, to the Department of Finance with regard to fiscal notes, but we purposely left out revenue estimates on tax expenditures from that analysis, and retained that responsibility and authority with the Department of Revenue. And I hope we don't forget that as we are diving into tax expenditures. And you brought up earlier, which I totally agree with, looking at tax incidents and the every other year reports that are given to us by the Department of Revenue. So I just urge a lot of caution. Thank you. Thank you, Representative Gomez.
Thank you, Senator Russ. So I guess so regardless of the philosophical difference about whether we should include purpose statements in taxes between the two chambers, we have before us in black and white in statute that's been signed into law that we are going to do purpose statements for these expenditures. And so, so I'm curious in terms of process, if what you're saying, because there's nothing, I don't think what I proposed is at odds at all with what you're saying. But I wonder, but I'm open to, like, if you think we should vote on all of them, like, I'm fine with that. I mean, we're definitely going through them one by one, reading them together as a group, having discussion about them. But if people, I've never been on a commission before, certainly never chaired one. So if people think that we should, like, have a more formal voting process, I'm very open to that. But yeah, just wondering what you're thinking about.
Well, Representative Gomez, even though the purpose statements have been in law for a number of years, required in law, as I just mentioned, they come up in every House tax bill, and since then, and very few, if any, that I can recall offhand, have ever been adopted in a conference committee report and have not found their way into statute. It's also, and this is just a difference in institution, generally the very first thing in other committees in the Senate, when someone brings in a bill that starts with a purpose statement, The very first amendment to that bill is to remove the purpose statement and let the language of the law itself speak to its purpose. And that's an institutional difference. And maybe we should be looking at that, at changing that somewhat, but there is a history there. If we're going to be really delving into these things, I don't want anything to be assumed to be acceptable on its face. And with respect to the committee, the commission here, and the legislative budget office, the Department of Revenue, all the work that and award-winning work, by the way, that is done by the legislative auditor. Let's just be, measure twice and only cut once. Thank you.
Thank you. Yeah, absolutely. I agree. These are very important. I mean, we can certainly talk more offline about the process issues, but I think that if Senator Rest or any other member feels strongly like that we need to get an on the record vote on each of the purpose statements, please communicate that to me. Otherwise, we're going to kind of be, we're going to certainly walk through all of them together, provide opportunities for every member of the commission to provide input. And, if they're kind of not in alignment with where people think we are, then we'll send them back for more work. But that's sort of what we're proposing right now. I don't know if anybody has any other questions or thoughts. I'll just leave just for a second. I know we're going a little bit over. We have just 2 more quick things to discuss. So there is also the question of how to deal with to deal with expenditures that conform with federal law. Is another question. I just saw actually Representative Hertas, let's just go to you before we start talking about federal conformity.
Well, thanks, Chair Gomez. And I have a little bit different view of the purpose of having a tax expenditure commission. And, part of what has often been complaints by constituents is programs or aids, and how do you measure the efficacy of tax policy if you don't have some nexus to what the purpose of that policy is? Now, I understand Senator Rest's point about let the text of the bill, language of the bill, the basis. Oftentimes, I think there is legislation that's passed, and we've seen some bullet points in terms. What I liked in particular was the term leaking. Is the policy actually benefiting individuals, companies who are not direct residents, and where we want to tighten up policy to make sure that Minnesota's taxpayer resources are used, managed, directed in such a manner that benefits. And some of that may be indirectly if that leakage means that it creates jobs for the citizens. But I could imagine in the future, as we embark on this path, that some of the reviews of expenditures may identify unintended benefits that were not part of the original mission statement or purpose. So I know there's always been a difference between the manner in which the House creates legislation and has purpose statements, and I've been well aware of trying to gain support in the Senate and being reminded that we don't do it that way here, but this is something new, and I think it probably needs a hybrid of both for those pieces of legislation that lack mission statements. The Tax Expenditure Commission and the LBO is going to have to look within the text of the bill or identify whether or not the real purpose of the program, the credits, are serving its purpose. And without a purpose statement, how do you really truly measure the benefit of that as intended and passed into law? Because too oftentimes legislative support and member support for passing legislation is predicated on what is being sold or what the purpose. To say that that's irrelevant, disagree with that point of view. So thank you for allowing me to make that comment.
Thank you very much, Representative Hertas, for those comments. One thing that stuck out to me that I guess I hadn't thought about was in with respect to the kind of leakage conversation was what you said about unintended benefits. So that's something that I'm filing away for just to think about as we're going through this analysis. And so thank you very much for sharing your comments. Okay, so I just would started to talk a little bit about the provisions in the tax expenditure budget that correspond with that conform with federal provisions. So our proposal is to start from the perspective of that we are going to subject these provisions to our analysis as a general kind of philosophical approach. One of the reasons that I think this is important is, there are two places, I guess, in particular that just floated to top of mind when I think about places that we do not conform with federal expenditure policy. And those are about the treatment of the preferential treatment of capital gains at the federal level. For example, in Minnesota, we tax federal gains like income, which contributes to the fairness and the progressivity of our tax code. Another piece that I believe has a similar impact is the fact that we don't conform with with the federal policies around the estate tax. And so for that reason, I know that there's sort of this for kind of ease of administration and sort of efficiency maybe purposes, I think there is a lot of pressure to conform with federal expenditure policy. But I also think it's important for us to just, be willing to take a kind of a look at that part of our tax expenditure budget to see whether it aligns with the values and the goals that we have for our tax code in Minnesota, some of which will be in alignment with the federal policies and some of which will not. So that's kind of like our initial thought is to say we're including the federal conformity items in our analysis. This is my personal thing, is that I don't have enough familiarity with these provisions myself to feel like I can make a statement other than that. So I've been talking to staff a little bit, and I'm going to request a briefing. We're going to figure out who the right person is, but just to sort of go over the federal conformity portions, the 82 provisions that are in the tax expenditure budget that are federal, that do conform with federal policy. And I would invite anybody, maybe you guys all understand those better than me, but we'll extend that invitation for that briefing to the whole committee, the whole commission, excuse me. And if anybody has a particular interest in making sure that a briefing like that works with your schedule, please reach out to LBO staff, probably to Catherine. I think would you be the right person? To Catherine and me, and we'll work around your schedule to get that kind of done before the our next meeting. Because if we can save a bunch of work and say, hey, these 50 are just, it would be impossible for us to decouple them, so there's no use really in us looking at them, or kind of developing some nuance among the different types of expenditures that we're sure to find when looking at those that are aligned with federal policy. And again, just like I'm open to that conversation and want to just develop my own knowledge base a little bit. Well, Commissioner's hand just went up and went down, but hop in if you'd like. There you go, Commissioner, please.
Sorry, thank you, Chair Gomez. I was just gonna offer, I would love to be part of that briefing, specifically. Might have a few bits of knowledge on that conformity piece as well. So
Wonderful. Yeah, we would appreciate, I guess I'd appreciate any insight that can be brought, because this is a piece that I'm kind of like, think we need to figure out how to balance, like, subjecting it to the rigor that we need, but not having people do unnecessary work if it's just like, this one's kind of a no-brainer. So that's the piece. We don't need to make like a decision about federal conformity kind of issues, how we're going to treat those items today. That it's not necessary, but I just wanted to bring it up as kind of a flag that there are a significant number of these of the items in our tax expenditure budget are these federal items. So if we're going to treat them differently, then we want to be thoughtful and figure out what that treatment is as we move forward through this process. So again, yeah, reach out about that to Catherine and I. Finally, we wanted to talk a little bit about the review schedule. Because we could do this kind of any sort of way where we're gonna start doing batches of purpose statements, obviously, and those will be brought to the committee. But also as we get into our substantive review of the different expenditures, the different items in the expenditure budget, we have some flexibility about like how we want those to be brought to us, in what order, whatever. So for example, I mean, what we've been talking about is like, so I personally just have like, I have some high priority expenditures just to me personally and to my community. So I'm interested in like, especially since we aligned and conformed with the standard deduction changes in the TCJA, what's up with the mortgage interest deduction? It's a lot of money. Who's taking it? Is it actually helping our housing crisis, or is it not? As obviously a housing and homelessness person, that's of high interest to me. Also, then there's some of like the wacky ones, like the racehorse exemption and the open space exemption for private golf courses and stuff that I'm just like, oh, those are weird to me. So I have like, my 5 to 7 top priorities, and if you too have 5 to 10 top priorities for these, please submit them to us and we'll kind of like move them to the head of the line. And otherwise, we're going to be kind of deferring to staff to allow them to move the sort of schedule of analysis forward in a way that just makes sense for their workflow. So that's kind of the final thing. And so are those sort of pieces of follow-up. If you have input about the process for reviewing purpose statements as staff brings them forward, if you have input or a particular interest in being a part of the conversation about how this commission should treat the federal conformity items, and if you have like your top favorite or least favorite expenditures that you want us to sort of fast track, then please follow up with that information. Okay, so that was me talking a lot. Does anybody have any thoughts or questions? We're probably that's pretty much the items that I had. Senator Bach.
Well, Madam Chair, if we're done with the agenda, I just have a question for the commissioner, as long as I can see them, on a totally unrelated subject.
Cool. I think we're done with the business. So yeah, please go ahead.
Commissioner, and those of you that are going to be here next year might care about this, but there's a growing number of restaurants, Commissioner, that are putting a surcharge on your bill when you have dinner. I experienced it again last night, a 4% surcharge. They got a little disclaimer on the bottom of the menu that says you can have it taken off if you want. If it's a surcharge on the entree, which it is it subject to sales tax or not? And as this grows, this is potentially one heck of a lot of money if we're not taxing it. It seems like it either should be baked into the 4% and they remit it, or somehow it gets added on. But I look and I scrubbed the bill pretty close to see if I could figure it out in the menu, and I couldn't. But every time I've run into this, I've made the restaurant take it off because I refuse. I mean, raise the price of the steak by 50 cents if you have to.
Right.
But I suspect this is going to be, and they make some specific language on the menu I looked at, that this is not a gratuity under section 177 point blah blah. So they can spend it however they want to spend it. Anyway, I just think it's the restaurant industry probably needs a memo on that, I think, because as you start doing sales tax audits, depending on how the department determines it or the legislature determines it should be handled, there is a firestorm brewing at the legislature, I would think, once that starts to happen. So it's probably better we get in front of it, because it seems like a taxable surcharge to me.
Thank you, Senator Bach. I think I heard Rep. Hertas say that he agrees that this is an issue, and I saw the commissioner come off mute. So if you have any thoughts to share with us initially.
No, I just, thank you, Chair Gomez. Senator Bach, I just wanted to thank you for raising that. We've already had that, we've had people already mention that to us, and that is something that we are absolutely looking into. And I am hoping that we will be able to put something out that gives more clarity on it, because I agree with you.
Very good.
Great. Thank you, Senator Bach. It sounds like we'll have some follow-up on that issue. All right, so I'm going to do last call for questions, comments, thoughts. And if not, I just wanted to thank everybody who was able to respond to the poll for the next meeting date. That makes it responding to that poll just makes it kind of easier for our crew to make sure that we have everybody that we need to move this work forward. So our next commission meeting is scheduled for Thursday, September 29th from 10 to 11. When we're going to continue these conversations that we've been having and really trying to prepare to support our staff as we move toward our first report to the legislature, which is due December 15th, 2022. So I want to thank again our presenters, Mr. Hammond with Pew and our own Mr. Wareka, and thanks to commission members for your participation. This meeting of the Tax Expenditure Review Commission is adjourned. Have a good day. Bye.